Very well, let's now do some business now. And the Kenya capital markets recorded depressed activities in the second quarter of this year on the impact of COVID-19. Latest data from the Capital Markets Authority indicates that all the four markets recorded reduced activities. More details with O'Brien Kimani.
Economic shocks occasioned by the coronavirus pandemic led to a depressed performance on the Nairobi Securities Exchange, according to second quarter report by the Capital Markets Authority. In the period, the Nairobi Securities Exchange 20-share index shed over 5% in one day, prompting a market halt sparked off by panic selling in an already bearish market. As at the end of quarter, market capitalization recorded a 4.4% drop from 2.1 trillion shillings registered in quarter 1 of 2020 compared to 1.4 trillion shillings in quarter 2 of 2020. Equity turnover for quarter 2 stood at 40 billion shillings compared to 43.7 billion shillings registered in quarter 1 of 2020, a 9.5% drop. The quarter recorded a net foreign portfolio outflow of 10.2 billion shillings compared to an inflow of 1.2 billion shillings in quarter 2 of 2019. This drastic change can be attributed to the panic trading brought about by the COVID-19 pandemic. The derivative market registered a 15% decrease in trading to 257 contracts traded in quarter 2 of 2020 from 302 contracts traded in quarter 1 of 2020. Similarly, the turnover and the number of deals in quarter 2 recorded decreased activity of 50% and 16.4% respectively. During quarter 2 2020, bond market turnover decreased by 13.5%, with 137 billion shillings worth of bonds traded compared to 158 billion shillings traded in quarter 1. Average foreign investors' participation in quarter 2 accounted for 65% compared to 61% recorded in quarter 1 of 2020, indicating a 3.5% increase in foreign investors' participation during the quarter. O'Brien Kimani for Business News Hour.